There's been a lot of questions, understandably, about the meaning behind the different strategy numbers. The main thing to understand about the strategy names is that each alert can be derived from one of 4 core strategies, power 1 through power 4. These strategies are based at their core around the Joule trading view indicator. That's what you see on the screen now. If you have the Joule, this is all going to make a lot of sense to you. If you don't have the Joule, we'll try to find the creator and see if he can make it available. It will help a lot in assessing these potential setups and deciding if you want to take the trades. If the Joule is not accessible to you, this blue line here is the Krown VMP Indicator. At the very least, we recommend that you pick that up and learn the basics of it. What you see on your screen here is a power 1 alert. So what makes it a power 1? The Joule has these 3 lines, blue, pink, yellow. You can see that all 3 of them are under 40. The lower, the better, but under 40 in this case. And blue has turned from white to light blue. It's also increased versus the prior row. The red line down here is DMI. It would be bonus points if it was green. It's not green, so perhaps a conservative trader would sit out on this one. And this flash back here is known as God mode. It gives extra confluence. The best looking Joule would have DMI being green, plus this flash in green, and then blue, pink, yellow, all under 40. The closer these are together, the better. This blue to pink right here, we measure it in terms of a percentage for the algos. It's just under 20%. The closer, the better. We like to see them get extremely tight together. If you see that with blue, pink, yellow extremely tight together, for us, it's usually a better outcome. But we don't completely discard a signal like this or a Joule formation like this. So this is our Joule signature. Again, it's combined with data from many other indicators, but at its core, we're looking at the Joule as kind of the first step as to whether or not the algos trigger an alert. Let's look at the price at the time of the alert. If you are confused with everything on the screen, if you're interested in what EMAs we use, here they are. Take a screenshot. On lower time frames, the SMA 9 and EMA 21, that's magenta and yellow respectively, are especially helpful. And we also have the meta signal support and resistance tool. Those are the horizontal lines that you see in the background, which tend to nail price action, as you can see here. So the alert triggers at this candle close. The stop loss is extremely tight. No big surprise here after this mega downtrend. Once we do get this alert, you're given an opportunity to enter on the SMA 9. If you had used a static stop loss and entered immediately at this candle close, you would have already missed out on the trade. As things have played out, we've hit TP1. It's another, well, so far it's another lower high. Probably a good place to get out on the weekend with Bitcoin in free fall and no one really knowing what's going to happen next. Now let's look at another power 1 where the algos were front running and it paid off. So here again, you see we have the blue line above the pink line, above the yellow line. The blue line, though, has remained white. Technically, this is not a signal. However, over the long run, for us, our data shows that it pays off to front run. So when we talk about front running the Joule, this is what we're talking about. This blue line is still white. Technically, you should wait for it to turn light blue. But let's see what happened. So again, this big downtrend, 45%. On this candle close, we get the signal because we're front running. Tight stop loss comes back and sweeps below the prior wick low. If you had been using a static stop loss here, again, you're out, which is why we prefer the close below method. It obviously paid off here to front run. It blasted through TP1, and the way things are looking, TP2 with a pretty high RR is quite likely. Again, with weekend trading, Bitcoin having just crashed, World War III around the corner. Right now, it's a series of lower highs. Nothing wrong with exiting here. It's something like 4 or 5 RR if you just took profit right here. You're not asking anything new of the market. It's an easy trade. You could say the same about TP2, but then you're closing in on resistance. Maybe it'll pay off, maybe not. If you're targeting TP3, you're basically betting on a reversal to getting back above this prior or this area of resistance. On a weekend, we would probably cut this, take our 4 or 5 RR. Let's now look at a power 2 jewel signature. So here we have blue increasing versus prior row, more than pink, both tightly knit together, which we like to see, and very low, in this case below 25. We've got yellow higher than blue and pink, so it doesn't qualify to be a power 1. For a power 1, yellow would need to be down below pink here. DMI is still red. If it was green, we'd have a higher confidence in this trade. For us, it's not a must-have, which is why this alert triggered anyway. The green flash in the background gives us some extra confidence going into this. Let's look at the price action and see how it played out. If we just zoom out here, so it's a power 2 expected after a significant downtrend, in this case a complete meltdown, from the breakdown 40% dip. The alert triggered on this candle close, and this is a case where it's up to your experience, your assessment of the chart as to whether or not you ape in or look for a better entry. With the way the jewel signature looked there, the way this candle closed, there's an argument for aping in. That's something that you've got to decide on your own using your own TA skills. No matter what you do, there's going to be times where if you look for the better entry, you're going to miss it, and that's just part of the game. In this case, basically no stop loss was needed. Market buy at the time of the alert, blasted up through TP2 in the first 2-hour candle, and now, as you can see, we've mapped out this series of lower highs. And why is that relevant in this case? Unlike the other alerts that we just looked at, TP3 here would give the chart just another lower high, which means it should be easier, or perhaps a better word is more likely to achieve, versus if TP3 was up here, now you've got to get through this whole area of resistance. So with TP3 well below this area of resistance, we would be happy to sit in this trade and see how it plays out, looking for TP3. Let's go ahead and look at another power 2 from 2 days ago on a 24-hour time frame that didn't play out very well at all. You can see here we have blue more than pink, both tightly knit together. In this case, below 40, right around 35, which is, we'd like to see it lower, but okay, there's something worth considering here. No support from DMI, which is still in red. No green flash in the background. But the big difference between this power 2 and the one we just looked at is here you have yellow and pink just on a nosedive, looking like they want to see zero, versus what we just looked at where yellow and pink had started to flatten out. So flattening out, nosedive. That alone could have told you, not sure if I want to take this one, sit it out. If you had, you'd be happy because this was the candle close that triggered the alert, and there was no chance of running up and even hitting TP1 in this case. It just went down for another low. However, this is crypto and altcoin. We all know that altcoins react to Bitcoin. Had Bitcoin rocketed up right here, this alert probably would have played out. We can look at Bitcoin on the same time frame. This was the candle where on KNC just now we saw the alert. If bulls had stepped in here and continued this series of higher lows, that KNC alert would have also played out. And that's just part of the game, and that's why you've got to manage risk. You can't know for sure what Bitcoin's going to do. This was this was unique behavior in terms of how Bitcoin had been playing out for the past many weeks. So that's going to happen sometimes. On our KNC alert, obviously it reacted very poorly to Bitcoin taking another leg down. But again, you may have stayed out of this one just based on the Joule signature. You really want to see yellow and pink flattening out more. It's not a fixed rule that the algos take into account right now. There's many reasons for that. Maybe one day it will be. But again, the alert is a call to action to assess a setup. Part of assessing the setup here, of course, is taking a look at the Joule. This is right on edge, and it didn't play out. Now let's take a look at a Power 3 Joule signature, and let's look at some other indicators along with it. Normally, Power 3 and 4 are going to trigger during times of potential continuation of a trend. So when you're longing, of course, you see a clear uptrend, the Power 3 or Power 4 comes, you consider taking the trade, looking for continuation. However, that's not always the case. For meta signals, the way that we assess the Joule combined with a number of other different data points, we often find these Power 3 alerts where if you were just using the Joule as it's designed to be used or using the Krown VMP indicator, the blue line here, you would not have any kind of signal. In this case, the blue line is below pink and obviously below yellow, so it's not Power 1 or Power 2. It's still white, so going by any of the traditional strategies, there's nothing going on here. You would want to wait at least for it to turn light blue. DMI is still red, so no support there, but we do have this green flash in the background to give you some extra confidence that maybe there's something here. Let's look at a couple of the other indicators. RSI has climbed above the EMA of the RSI. Okay, point of note. BBWP, extremely high, obviously coming off of being totally maxed out. And importantly, for our case, PMARP, extremely low. Anything below 20 is very low. So the algorithms in this case are looking at the Power 3 Joule alert, the fact that RSI has diverged somewhat from the RSI EMA and is above the RSI EMA is extremely high, and PMARP is extremely low. When you have these extremes, you oftentimes have a trade. If we go up and look at how it played out, so again, we're coming off of this huge meltdown, 31%. And even though it's not a Power 1 or Power 2, it's getting this bounce. In this case, we came back down and wicked just below the prior wick low on the previous candle. This is why we much prefer to take these bigger individual losses on the stop loss close below method versus setting a static stop loss and risking missing out on the trade. Of course, had you looked for a better entry, perhaps in this wick area, this prior wick area, you could have put a static stop loss a little bit lower and maybe you would have gotten away with it. As things have played out, the first candle went up in TP2 precisely, and TP3, which aligns with the SMA 9, looks pretty likely at this point. As with the last trade we looked at, the TP3 level is not asking anything new of the chart. It will just be another in a series of lower highs if we do make it to TP3. We especially like going for TP3 in those kinds of cases because nothing new is required. If TP3 was up here above this area of resistance, that's a different story. It might get there. It would probably take a whole lot longer to get there. In this case, we'd be happy to sit in it and look for TP3, which is an RR of, I believe, over 5. Not bad at all for a Sunday afternoon trading. Here we have a Power 4, similar to Power 3. Yellow and pink are above blue. In the case of Power 4, the blue line or the Krown VMP line is much higher. Typically, it's going to be between 45 and 55, and it's increased by 1. It's still white, so a conservative trader would not even consider this. Long term, as we've said many times, it pays off to front run if you combine it with correct other data points from our other indicators. In this case, we have support from the DMI, but since these Power fours will almost always trigger in uptrends. It's going to be expected that you have that DMI support. Let's take a look at how it played out. Not very well. So what could have given you a hint that this was a trade to stay out of? Well, you had this RSI, this previous high at 75, and then at the time of the alert, this candle closed, you have RSI at 68.7. That, of course, is a potential for RSI div. It was confirmed when the next candle closed, but by that time you had already lost the trade. You have this potential div. Some people will not trade when there's a potential bearish div on the charts. Some people will. It's up to your style. It's up to you to assess the setup and decide. If there was no potential div there, then much better chance of this at least going up and hitting TP2. Let's take a look at another power 4. So here, similar, DMI is green. We have the blue line is still white, but it's turned up. It's between 45 to 55 range. And the price action, we expect to see an uptrend, which we do. So similar to the last alert, there is this potential bearish div. We've put in this white line here, which corresponds to this white line here. There's a potential bearish div, but the degree of the divergence is much, much less. We've got this prior high at around 72, and here we are around 70. So the degree versus the degree of this divergence is much less. Still, there is potential bearish div there, and some people would choose to sit out based on that. However, in uptrends and bull markets, if you always stay out when there's a potential bearish div on the charts, you're not going to trade many continuation alerts. If that's your style, no problem. Stick to the power 1 and power 2s. Wait for the dips to come, and then wait for those power 1 and power 2s to start triggering. You can see here, again, it was a good opportunity to just hit the market buy button. And you can see it immediately gave you TP1. The next candle, it flirted with TP2. On a side note here, when you see price action get that close and pull back, you can kind of consider it played out, and we would just exit on the next candle. As it so happens, as long as we stayed above the EMA 21, the yellow line here, we actually got a continuation of the uptrend, and probably that's where we got the real bearish div. With you can see the degree is much more significant. We went from 77 to 73, and the price with that wick, it's telling you unlikely to continue, right? And there we went. So even if you just decide that you are somebody who trades potential bearish divs, no problem. In this case, on a power 4 alert, you're looking at two different uptrends. One of them happened to play out, the other didn't. That's part of the game. The one that played out gave you, if you had stuck in through TP2, it gave you something like a 2.5 to 1 RR. If you had spotted this chance for the better entry, or for the quick entry, I should say, you could have greatly increased the RR.